Hello everyone, this is Shailesh Kumar with Astute Investors Calculus. Welcome. Today I am going to talk to you about 5 deeply undervalued large cap stocks set to soar in 2025. Let's get started. The way I pick these stocks is to look at the margin of safety that these stocks offer. A margin of safety, as you know, is a cornerstone concept in value investing. It does two things. First, it sets the conceptual floor on the stock price. Pretty much you can take that as a floor where you expect the stock price to not decline much if you have a large margin of safety. Number two, it also indicates how much the stock can rise before it becomes fairly valued. So a large margin of safety means the stock is trading at a large discount to the fair value. That also means that if the stock were to regain its fair value, it would rise by the amount of the discount, by the gap that exists between the fair value and the current value of the stock. You can see the margin of safety is defined as fair value minus current value of the stock, and this gives you the margin of safety in terms of the dollar amount. To calculate the margin of safety as a percentage, you take this number and divide it by fair value and take a percentage of that. You'd multiply the result with 100. We know the current stock price. Generally hard to figure out what the fair value is. What you can do is to estimate it in a few different ways. Generally, if you've been investing for some time, you have some ideas based on the industry or based on the sector, what multiples to use. And typically for industrial type companies, you may want to use a price to earnings multiple of about 15. Price to book maybe 1.5, depending on how conservative you are in your valuation. The second way you can do is to use something called a Graham number. Graham number is blended multiple devised by Benjamin Graham that combines the price to earnings ratio and the price to book value to give you one single number. I may have videos about Graham number in the future. The third possible estimation you can do is to calculate the liquidation value. In there, you assume that if the company were to be liquidated today, what is the total value it will fetch in the marketplace? The fourth possible way to estimate is to do a discounted cash flow analysis. You may have a few other ways to do it. Some people look at enterprise value, etc. I have the discounted cash flow highlighted over here because that's the method that is being used in this particular screener to calculate the margin of safety, to calculate the fair value and then calculate the margin of safety. So we actually found 5 different stocks that match our screener criteria. We are looking for margin of safety to be greater than 30%, and we are looking for the market capitalization to be greater than $5 billion because we are going for large cap stocks. And then I generally look for stocks that are listed on the American exchanges because I'm more comfortable with American stocks, but we actually have so many opportunities right here in the US that there is actually less of a need to go international today. Let's start with stock number 5, Viatris. The symbol is VTRS. This stock currently offers 36% margin of safety. Viatris is the largest generic and biosimilar drug manufacturer in the world. It was formed in 2020, and it was formed by a combination of Mylan Labs. You may remember Mylan used to be one of the largest generic drug manufacturer, and the Pfizer's Upjohn unit. It has been about 3 to 4 years since the company was formed. They inherited a lot of problems. Today, the company is actually working to simplify their business structure. They have legacy brands like Viagra and Lipitor and a few others, so they do have a pretty good cash flow coming in, but they are working on divesting a few locations, a few plants, a few brands, and their focus right now is to use the proceeds to first pay down the debt and then take care of the shareholders in terms of buying back stock, issuing dividends. Remember, the stock symbol is VTRS. You probably want to write it down for the review. And the stock is up 21% this year. Stock number 4 is GXO Logistics. Currently, the stock offers 40% margin of safety. The company is involved in supply chain optimization, automation within the warehouses. So, they have robots, they design systems to perform the warehouse operations, pick and pack, those kind of things. E-commerce and warehousing services. They have 970 different warehouse locations actually spread out all across the world. And this warehouse is total 200 million square feet. 30% of the Fortune 100 companies are their clients. And in 2023, the revenue was almost $10 billion. It is not a small company. GXO was a spin-off from XPO Logistics in 2021. A little bit about XPO. XPO, if you're not familiar, is one of the best performing stocks in the last decade. XPO spun off many different businesses from their main business. GXO is one. United Rentals is another one, and that stock has also done very well. So what's going on with this company? First of all, the stock is down 32% this year. But if you look at the chart, you see something interesting going on. The stock actually ran up quite a bit, like in October this year, and it stayed there for a while and then it fell. And the reason is that there were rumors that the company is entertaining a buyout offer, and the company did confirm that they are looking at a few different buyout offers, not one but multiple. The offers they were looking at tended to be in the $70 per share range. The CEO also announced their retirement in 2025. Eventually, the company decided they are not going to pursue buyouts, and they rejected the offers. So the stock fell because people who bought the stock expecting a premium price at the buyout sold off. The company, other than this, is actually very, very strong. They have strong financials, growing revenue share. It's one of the largest contract supply chain provider in the world. I would own this company regardless of this buyout brouhaha. You may want to take a look at this stock as well. I do expect the stock will do really, really well in 2025. After all, this is in the rearview mirror. Both VTRS and GXO are compelling opportunities today. They offer deep margin of safety, strong management team, and financials. VTRS is actually a blue chip in making. They have very good dividends. And GXO has, as you have seen, taken temporary blows to the stock price, but I do expect the price to recover very soon. I have shared 3 more stocks with my premium subscribers. In addition to these 2 that you just saw, the stock number 3 offers 44% margin of safety. It's a real estate company and it has a cult following. It has made many, many millionaires already. Stock number 2 offers 68% margin of safety. It has been beaten down quite a bit this year. One of the largest chemicals company in the world, selling at almost the book value. The market is offering to value the company at its asset, and it's pretty much discounting its operating business completely, which is kind of strange because the company is profitable and cash flowing. And the stock number 1 offers 41% margin of safety. It is a financial company that's growing like crazy, and the stock is a great opportunity today. You can have these other 3 stocks by just going to this URL. It's https://bit.ly/AICSOAR. And with that, I want to thank you. Happy New Year. Please subscribe for more ideas. I'll be posting quite a bit in the next year. Thank you.